What could be worse for a landlord? Reducing their rental price to secure a tenant, or sticking to the rental price and facing void periods? Right now, thousands of landlords across the country are asking themselves this exact question. For the first time in recent years, rental properties are sitting on the market for longer and struggling to find a tenant. But I can tell you, I've been in the property market for several years, and this is just the natural cycle of the rental market. It simply means that landlords have to adjust accordingly. Now in this video, I want to break down what's happened to rental prices in recent years, but also the current landscape and what landlords can do to make sure they maximize on their rental investments. Now, will we see a boom, bust, or steady growth? Make sure you stay tuned. At the end of 2024, the average rent of a newly UK rental property was just over £3,200 compared to the end of the pandemic lockdowns. Rents had risen by 27% since 2021, according to the online property website Zoopla last year. This is in comparison to 19% increase in earnings. Now, rent started to soar just after the lockdown was lifted in 2021, which resulted in average private rents hitting record highs. Rental inflation in the UK has slowed to its lowest level in 3.5 years, with rents rising only by 3% over the past 12 months. This is a huge decrease from what we saw the year before, which was 7.4%. So why is this happening, and what does this mean for landlords? Well, as we've seen, that rental growth of recent years has been very high, but the supply and demand is shifting and it's starting to narrow that big gap that we saw. When we look at demand for the last year, we can see it's dropped by 17%, and rental properties available, well, that's actually increased by 11%. However, the market is still competitive, with 12 renters chasing every home available on the rental market. And when it comes for the average agent that has properties, well, currently it's 13, and that's up from 10 in 2023. But it is still lower, 22% lower than pre-pandemic levels. While there are more properties available on the rental market, affordability continues to be the biggest threat for rental growth. In fact, if we look at the UK rent over the course of the last 3 years, we can see it's increased by 24%, and that's added £3,000 a year more for tenants' housing costs. The average rent now is £15,000 across the UK, and I promise you, in London, it's easily going to be double that amount. So what does this mean for tenants? Well, they can no longer sustain rent increases, and of course, landlords are happy to adjust. Even though the rental stock has increased short term, the overall number of available rental properties has remained the same at about around 5.5 million. Now, why is that? Well, there's a few reasons, but mainly it's going to be because of the tax changes, mortgage rates increased substantially, but also just landlords exiting the market. Now, overall, we can also see that the upcoming Renters' Rights Bill, but also new EPC regulations are discouraging investment in property in the UK. According to Zoopla's Executive Director Richard Donnell, rental inflation has slowed, which will be welcome news to renters, but there are still 12 people chasing every home for rent. Growing supply is essential to support those on lower incomes, and policy reforms need to minimise the impact on supply. London saw the lowest increase of just 1.1%, whilst Northern Ireland led the way, with surging rents up to 9%. Other regions, including North East at 6.3%, Scotland 5.8%, and East Midlands at 2.4%. At city levels, rents are now rising slower than average earnings, with some locations even seeing a decline, including Nottingham, Leeds, and Newcastle. Newcastle and Nottingham especially is a perfect example. With Nottingham, we can see that rise and increase of supply is actually pushing down rents, which continues to show that property is hyper-local, whereby one region could be doing one thing and another can be doing completely opposite. And the fact that the rental market can make a huge shift in just weeks absolutely means you should subscribe to this channel so you don't miss a thing. And looking into the capital specifically, recent data tells us that over 125% of landlords have decided to reduce their rents in order to secure a tenant quickly. And what about rents? How much have they dropped? Well, data tells us that some parts of London has been as far as 10% drop in rent. Compared to last year, London now has 40% more rental properties available on the market. Now combine that with fewer renters on the market, the gap between supply and demand is now becoming bigger. Adam Jennings, head of lettings at Chesterton's estate agencies, says that February didn't see the volume of tenants entering the market that many landlords had expected. At the same time, the number of available rental properties continued to rise, which has left landlords little option but to start reviewing their prices. New data from Foxton Estate Agency says that the number of new letting instructions was up 19% in comparison to 2023. However, the demand from applicants down 15% compared to last month. Now, of course, this naturally increases competition for landlords' properties. If you're a London landlord, you may be wondering what are the areas most affected. Well, if we look at the south, we can see it continues to be the area that is most demand. But that being said, there has been a drop in demand of just over 20%. West London has been the only area that has seen a year-on-year increase of from £459 to £487. And when it comes to the overall London average, we can see that rents decreased 2% year on year, but rose 3% compared to January, averaging £561 per week. Looking ahead, rents are forecast to increase anywhere between 3 to 4%. Now, affordability is going to be the key factor in limiting rental price increasing. Now, net migration is going to be on the low end, so we've been told. And also that slight increase in rental stock is going to keep demand in check. But the changes in regulations and the sentiment of landlords could limit supply. So here are a few things to avoid any void periods, and it's not rocket science. Firstly, see what upgrades you could do to your property. That could be anything from new flooring, a lick of paint, dare I say even furniture. Now, gone are the days whereby you can have a dated property and expect high prices. We're not in that market at the moment, and that's what markets do, they shift. Sometimes you could get away with that, but to make sure your property is bulletproof, make sure you do those upgrades. Secondly, timing matters. What I mean by this is that rental is cyclical. And if there's anything like in London, we know that the spring and summer, especially the end of summer, is when you're going to get the maximum amount of rent for your property. So make sure, if you can, time the property in terms of the rental and the tenancy coming to an end, that is strategic. And thirdly, make sure your rental price is based on evidence. So what I mean by that is that a lot of agents will want to win your listing, and meaning that they will overvalue the rental property just to make sure that they can have the property for themselves, or then eventually having to reduce the price. So make sure they provide you with evidence with the price that they're suggested. Otherwise, you may end up with a rental property on the market for weeks, reduce the price, and then end up with a property that all the renters that see online think that there's something wrong with your property. And we have a ton of free resources. Just make sure you follow the link on the description. Whether it's rental or whether you're looking for an agent anywhere in the UK, we can guide you in the right direction.